Hello, and welcome to this EcoCiv Dialogue on Global Systems Change. My name is Andrew Schwartz. I am co-founder and vice president of the Institute for Ecological Civilization, and I have the privilege of moderating today's dialogue on the topic of public banks, a path to economic transformation in California. So we actually have a wonderful pair of panelists joining us today for what will be a lively, interactive conversation and dialogue about the long-term well-being of people on the planet and how public banking can be an important part of that. So with us is Naveen Agrawal, who is an organizer with the Public Bank Los Angeles, as well as California Public Bank Alliance. And he's one of our experts that comes to this movement, this public banking movement, from his work in affordable housing development, among other things, which is an industry that depends on private finance to provide a public human right. So he views, if I put words in your mouth, Naveen, you view public banking as an opportunity to change how Los Angeles provides for generations to come. You're also an avid cyclist, I understand, with high hopes for a city blanketed in green space and bike lanes, a vision that I too support. So I'd love to see that come true. Anyways, thank you so much, Naveen, for joining us. We're happy to have you with us. Alongside Naveen is co-dialogue partner Ellen Brown. Ellen is the founder of the Public Banking Institute and author of, I guess, a dozen books and probably hundreds of articles. She's developed her research skills as an attorney practicing civil litigation in Los Angeles. Her best-selling book, The Web of Debt, she turned those research and writing skills toward the analysis of the Federal Reserve and the money trust, showing how private cartels have usurped the power to create money from the people themselves and how we, the people, can get it back. So we look forward to hearing some of your insights, Ellen, and particularly bringing in some of your background and experience with the history of public banking in the US and the Bank of North Dakota. So thank you, Ellen, for joining us, who's also living in California, so a couple of Californians here. So our format today, it's dialogical, it's interactive. All of you who are watching at home, which is all of us, I guess, I'm in my garage, how about you? All of you who are watching, I hope that you're encouraged to submit your questions for the panel or even your own reflections, because I want you to be engaged, right? You're not just here to listen, we're here to interact with one another, given even some of the limitations of Zoom and a group that's our size. And after about 60 minutes of conversation with our panelists, we'll actually then go into breakout rooms using the Zoom breakout feature for another 30 minutes of dialogue amongst ourselves, all of the attendees. So there's that chat function at the bottom of your screen in the Zoom window. Use it. You will not lose it, but use it. So fantastic. Let's dive in. And I'm going to throw you a warm-up question, so to speak, right? And it's a question that I hope will result in being answered toward a useful introduction and framing for our discussion. The question is, in a sense, simple, and it's just short. Why public banking? Right? So put another way, are there problems with our private banking system for which a public alternative offers a solution? Ellen, would you like to get us started?
Sure. So you probably have to maybe start with what is public banking. So a public bank is a bank. I mean, the way we frame it anyway is a bank. I mean, technically a public bank is traded on the stock market, but we usurp the title. So a public bank is a bank that's owned by a government. So it could be, I mean, it's owned by the people, but through their government. So it could be a city, a state, a county, a tribe, a country, and globally, 25% of banks are publicly owned. I mean, it's not a new concept. It goes back to the 1500s, and it's just mainly new here in the US. But our one stellar model that, but for that, we probably wouldn't have a public banking movement, is the Bank of North Dakota, which was formed it was formed 100 years ago, and even though it's in its charter, it says its purpose is not to make money. It's actually, the purpose is to serve the local community. And yet in 2014, there was an article in the Wall Street Journal that said the Bank of North Dakota was actually more profitable than Goldman Sachs and JP Morgan Chase. So how is that possible? I mean, that article said it was because of oil, but in fact, I mean, the Bank of North Dakota doesn't even, well, anyway, it's, the state immediately in 2014, oil crashed, and the state budget actually got in trouble. And so what they did was they tapped up the Bank of North Dakota for an extra dividend. Of course, they own the bank. So that's one of its many fine features, is that you can use it for a rainy day fund if the state runs into trouble. So it's some profit for the government, obviously. And 50%, well, as much as 50% of infrastructure loans are for interest. So if you own the bank, obviously you save that money and save on fees. I guess $160 billion annually are paid just in interest by local governments across the country, just in interest to private banks. So if you cut out the middlemen, I mean, that's what I say is Bank of North Dakota's secret. It's not oil. It's the fact that they cut out the middlemen. So they keep the profits for themselves. So they don't have high paid shareholders, they don't have shareholders bleeding out the profits. They don't have high paid CEOs or executives. They don't have to have a lot of branches. They actually only have 2 branches. For a long time, they only had 1. They don't have to advertise because by law, all of the state's deposits go into the bank, and they don't advertise for borrowers either. They partner with the local banks. So the local banks are really, they deal with the customer and they keep the customer. And it's only if the local bank needs help with their loans that they turn to the Bank of North Dakota. So it's really more of a banker's bank. And I know that's not the model we're necessarily talking about in Los Angeles and other places. Germany has a very, a more local model that probably the closest to, although we're not trying to copy the German model either. But I'll let Naveen talk about that, what we're doing locally.
Yeah, and before we dive into what's happening in California, Naveen, I'm just curious, could you explain for yourself why public banking? I mean, why do you care about public banking? Oh, I'm not hearing your audio.
You hear me now?
Yes.
There we go. I think your question is best answered by referring to kind of one of your sub questions, which is what, if anything, isn't working about privatized finance right now, about the financial system that we have right now. And in that, I'll actually to parrot something I once read and Ellen had written in an article, is that it's about public infrastructure. A lot of our financial infrastructure is actually privately controlled, akin to a private road. What that means in reality is that a lot of our public good is financed privately. Ellen also alluded to this just now with regards to bonds. The city of LA issued a $1.2 billion bond, a voter-approved bond measure, with an additional $700 million that will be paid over the course of 30 years at 3%-ish to private investors. Those are folks like big banks, pension funds. They're not typically folks that are based in LA. Like, you're not really talking about, like, if it's an LA bank, maybe, but it's generally large corporations and larger institutions. On the flip side of that, you also have the city of LA's $10 billion budget, $2 billion of which is invested in those same corporations in their commercial paper, in bonds, short-term notes, of Chevron, JP Morgan, US Bank, Koch Industries. And that's really just a function of they need a place to park their money. They park about more than half of it in US Treasuries. If you think about this from a public financial infrastructure perspective, the way that our financial system has evolved is with again, to repeat what Ellen said, with a lot of kind of people in the middle. And that's what banks do. Banks are our conduit, yours and mine, to the Federal Reserve. If we have money in your checking or in your savings account, I think it's true for savings, I'm not sure about checking. It's basically a ledger that's held at the Federal Reserve. It's the Federal Reserve saying that this money is real. It's not even the bank saying that. What that translates to for us is that we are relying on these private entities who have shareholder value to uphold and a profit motive to protect not only our funds, but to fund things like affordable housing. To put a finer point on that in particular, I came to public banking as a movement and as a cause by working at a bank. I worked at a large 80,000 person multinational bank, and I worked in their affordable housing lending division. What our job is lending and investment for tax credit affordable housing. It's a way of funding new construction as well as acquisition rehab of affordable housing around the country. It's how most new affordable housing is built. Interestingly, it's a tax credit. It's predicated. A bank only wants to fund that housing insofar as they have a tax footprint that they need to offset. Basically, they get feel goods from the IRS. Well, they get feel goods from a different branch of the federal government, but they get actual write-off for investing in affordable housing. That means that if the corporate tax rate changes, like it did in 2017, it dropped by 10% or like 7%. What happens is banks have less appetite. That means that if the rate at which you give these credits increases, like it did at the beginning of this year, banks have less appetite because there's more to go around. It's a supply side market-driven solution to the provision of a public good. Similarly, last year when COVID hit in March, the bank I worked for decided to basically increase its spreads, which is to say made their loans more expensive, targeted 11% return instead of 10%, and lopped about $100 million off of their affordable housing lending portfolio, which is about 20%. The thought there being at the time, similar to other banks, we don't know what's going to happen, so let's be extra cautious. Let's make fewer loans. Simultaneously, of course, you had in LA alone about 400,000 people at immediate risk of eviction within about a month. So the point there being that there isn't an alignment between private profit and public social good. We've built a system that kind of cobbles together some sort of alignment through things like banking regulation, like the Community Reinvestment Act that kind of incentivizes banks to do some of this work through things like tax credits, but it's all very much market driven. What public banking is about is creating a public financial infrastructure so that we don't have to be beholden to private banks to service this work. I've been speaking for a moment, and there was a second question that Ellen kind of posed to me, but I also wanted to give it back to you for a moment, Andrew.
Yeah, Naveen, that's great. I think this tension, if you will, between public interest and private interest, right? I mean, that's something I hope we can dig into a little bit more, the relationship between private and public, and sort of questioning whether or not they can or should be compatible, or if something else is needed. But I do want to dig back into California. Ellen had mentioned, the Bank of North Dakota. It's 100 years ago that was established, and I understand, that it was. So when we talk about California, right, it's the 5th largest economy in the world. So banking policy, it's not a minor matter. Banking policy for California. And I think that in recent years, we've actually seen some really interesting, exciting new developments that I hope you can share with us about. I understand that California actually passed the first state law in 100 years since North Dakota to allow local governments to charter public banks. And that even this year, I think it was, that California State Assembly member Miguel Santiago, along with colleagues, introduced the California Public Banking Option Act to create BankCal, a statewide public bank. So together, it seems that you've got two different pieces of legislation. Maybe you can talk about that cover both banking for local governments as well as banking for individual, normal people. Could you say a little bit about these exciting developments in California and what you see as their significance for advancing what we might call a well-being economy in California?
I'd be happy to, and I'm sure Ellen would have smarter.
Your sound right now.
Still lost you.
How about now?
There
we
it
go.
is. There it is.
Sorry about that. I definitely need to get new headphones. Let me know if it goes out again. I'll keep an eye on my yellow around my box. I was actually saying that I'd be happy to speak to that, and I do think Ellen would actually have smarter and more succinct things to say. To start off, this movement in LA and in California sprang from what is basically a divestment movement. We all remember the Occupy movement and this growing awareness of the concentration of wealth and how private finance contributes to that. When Wells Fargo was funding the destruction of Standing Rock, the city of LA banked with Wells Fargo. And what our organizing group was able to succeed in doing was forcing the city of LA to divest from Wells Fargo, which was no small feat. The problem thereafter is what happens when you divest from Wells Fargo is you still need to bank somewhere. So a lot of that money went to Bank of America. I think it right now sits between Bank of America and maybe JP Morgan. What that translates to is kind of more of the same. Folks who follow California politics, Bank of America was hit with a $100 million lawsuit for having basically bungled the administration of unemployment benefits to the tune of maybe 10 times as much, $1 billion. And that's basically because there isn't really a state or a local option, again, for the administration of such programs. I think Andrew hit it exactly right in that what the two laws that have passed since enable us to do is finance more of like the provision of social good from local governments, and then also finance retail accounts for the unbanked and underbanked, which is 1 in 4 people in California. AB 857 passed in 2019. A lot of lobbying and grassroots work from some of the folks on this call today. What that allows for is for municipalities to create a public bank. They charter a bank. They have to create that charter with the approval of their city council, or rather create that application for a charter. Then they apply to the Department of Business Oversight, a statewide agency that also issues charters to banks across the state. Those regulations are still being finalized right now, a couple of years later, and it basically gives explicit permission for municipalities to create these kind of partnership banks. The idea here is not to be competitive with commercial banks in a similar way that the Bank of North Dakota is framed. It's more of a banker's bank, and when you're talking about like anti-Wall Street, a concentration of wealth, why would you want to be a banker's bank? There are some good reasons. One of which is there's a lot of small banks. There's a lot of CDFIs, community banks that do a lot of the lending that bigger banks might not do. You're talking about micro businesses, folks companies under 10 employees, informal businesses. These kinds of loans, even like home loans, portfolios or like capital loans for a business, these kinds of loans are more resource intensive, and typically, like I worked at a CDFI, and when the pandemic hit, that CDFI was able to issue these kind of sub $10,000 loans with a guarantee from the state through a state infrastructure bank. That state infrastructure bank has a limited capacity, and there isn't a local counterpart. And it basically depends on the relationships that you have. And so what these local banks can do with more support from a local public bank is extend that same lending through things like a guarantee from that local public bank, or that public bank could actually buy off some of those loans or a portion of them, which basically frees up more money for that bank to continue doing what it's already doing. In the future, that local public bank would also be able to do things like bond underwriting. A lot of our school districts, especially in more remote parts of the state, pay a lot to finance their infrastructure projects, to like build new buildings, to do any kind of work around a school. I read a report once where a school district, I think it may have been Mariposa County, that was paying 16% for a bond issuance, which means that if they're trying to make $100 million, or probably less, let's say $20 million, they're gonna spend about $4 just on getting that issued so that they can have that money. And that's money that they're paying in addition to the debt service that comes thereafter. So when you're talking about local public banks, that's how these banks can support kind of the public good. The other piece of legislation that passed just this month is AB 1177, which basically guarantees any Californian an access to a bank account. It does it through an existing infrastructure, which is private finance. So it sets up a board. It won't be set up for about 2.5 years, but it will set up a board of governance wherein there will be this board will kind of broker relationships with individual banks so that those banks provide accounts for anyone who applies. That means that folks who are undocumented can get access to an account. It means that folks who don't have access to like check cashing, which is a $500 million industry in this state, can basically get their checks cashed. They can pay rent via debit card. These kind of things are fundamentally transformative. This isn't really, I think that to Andrew's point earlier, it's part of an ecosystem that when you think about it, it's like, all right, who is missing in our private infrastructure, in our privatized financial infrastructure? A lot of people who don't have bank accounts, a lot of people who don't have access to low cost of funds, a lot of people, businesses, governments, and a lot of the provision of social good that feels kind of tenuous when things like a pandemic come around. That's exactly what these two bills are trying to work towards, and they work hand in hand with potential statewide efforts, and then also a similar piece of legislation that's being introduced at the federal level by Representative Alexandria Ocasio-Cortez. With that, I do want to hear what Ellen has to say as well on this topic.
All right, well, I'll just throw in one thing you mentioned about state infrastructure bank and its limitations. I mean, we have a state infrastructure bank in California, but it's a revolving fund. I mean, it's not really a bank. So we've had a bill, we've had 2 bills, hopefully it's going to get renewed, to turn the infrastructure bank into a real bank. The difference is, if you're a real bank, the capital base of the infrastructure bank, the last time I looked anyway, was $300 million. So if you turn that into capital, you can make $3 billion in loans. You can make 10 times as many loans. You have to get your liquidity from somewhere, but ideally we could get it from the Fed. I mean, I'm hoping these bills at the federal level, that the Wall Street banks can get virtually free credit from, I mean, that's the whole American system, was sovereign credit. The whole idea that you issue the credit, you build the thing and pay back the loan. And that's what our country was built on. And that's how China does it. That's how they fund their infrastructure. They own the banks. 80% of banking assets in China are owned by the government. So if they want to build 10,000 miles of high-speed rail, or 12,000, whatever it was, which they did in a decade, they just borrow from their infrastructure bank, which creates the money as a deposit on their books. That's another thing. Banks actually, according to the Bank of England in 2014, banks, not governments, create most of our money. They create it. They just create the deposits on the balance sheet as a loan. So you create the loan. That's how the Reconstruction Finance Corporation, I mean, it's a little more complicated, but anyway, that's how during the Great Depression, that's how the country was rebuilt, and World War II was largely financed. So that's what we would like to be able to tap into at a local level. Right now, Wall Street can do it, but obviously they're not sharing those benefits with us. It's sort of the first mover advantage. You know, they get the cheap money and then they lend it to us at much higher rates. So there's no reason why state and local governments shouldn't be able to borrow at the same rate that a Wall Street bank can. I mean, state and local governments are actually much more stable than a Wall Street bank. The only reason the Wall Street banks are stable is that we, the people, the government, supports them and bails them out. I mean, they would have all gone under in the 30s, except that the federal government passed FDIC insurance. So we, the public, are guaranteeing the private deposits of these banks. So anyway, state and local governments should get the same perks, and hopefully the Public Banking Act and the Postal Banking Act might pull that off. And the National Infrastructure Bank bill, I think, is quite good on the federal level.
Just to add on to that, as an illustrative point, during the pandemic, and Ellen had written a letter on behalf of the Public Banking Institute in support of our statewide bill that pointed out that the Federal Reserve had basically flung open the gates for commercial banks to borrow basically as much money for as long as they want at zero cost. Simultaneously, the Federal Reserve created a facility for, and this is basically trickle-down economics, right? Like I see Kevin shaking his head in the audience. Like the idea is, it's understood that it's not always going to be effective. It is pushing on a string, which is how Greenspan described it. It's like you're saying, oh, we'll give money to the folks at the top, and eventually that will make money cheaper for everybody else. And the result of that, to Ellen's point, we saw also in 2008, we bailed out the big banks. I don't remember. I think it was a couple million people who lost their homes. What happens instead is that now the stock market, is hyperinflated because all that money that the banks had to go somewhere, but people still lost their homes. And we're seeing the same thing this time around, where banks could borrow ultra cheaply. If the city of LA wanted to borrow, they would have had to do it at about a 1.8% spread on top of it would have been about 1.8% on top of about zero. But they could have gone and gotten that same loan from any commercial bank. And so either way, the Federal Reserve would have pocketed that 1.8% spread, which had to be paid back in 2 years, or a maximum of 2 years. So all that to say that that's exactly how we conceive of specifically local finance, local and state. It's always, you have to pay for it, and you pay for it with tax revenue, which is why the schools are better in the wealthier districts, right? That's not true for the Federal Reserve. That's not true at the federal level. We can print the money, and we do. We're never actually paying. We're never actually paying for something with tax revenue. We're paying for it with money that is literally like a ledger on a bank account, and then we are issuing bonds on the back end that trues up against that. But we don't even have to technically do that piece. It's meant as a way to offset the extra money that we're putting on the market by spending that money. We have the same power to empower states to spend money that they don't necessarily have or that they do need. And similarly with localities and banking, because it has that ability to create leverage, is a really key piece of that, even if it doesn't have access to the Federal Reserve, which odds are it wouldn't in the beginning.
I should, since you're quoting me, in March of 2020, the Fed opened up its discount window at 0.25%, but only for 3 months. I mean, like they were short-term loans. But so that's what I'm hoping with this Public Banking Act. There's no reason they couldn't make it longer or agree to roll over those loans. And also in the Federal Reserve Act, there is room to wiggle in sections, or is it chapters 13 and 14, I think. Anyway, there's things that you could interpret as making loans to state and local governments. And right now, the reason local governments are, well, they set up the municipal liquidity facility, allowing supposedly that would bail out the local governments and the state governments, but it didn't. Nobody borrowed from it because the interest rate was so high. But it's the rating agencies that rate the local governments, and they are actually, I saw one study, they're actually 63 times, or corporations are 63 times more likely to default than a city government or a local government. And yet the rating agencies rate the the local governments as a worse credit risk than the corporations. So the corporations got a very good deal out of those facilities that the Fed set up, managed by BlackRock, and the state and local governments got a bad deal out of it. But there's no reason that we shouldn't get actually we should get a better deal than Wall Street, because we haven't cost the country that much money and that much distress.
So as a philosopher, I'm still hung up on Naveen's question of whether or not money is real. And
you went silent. Can't hear you. Can't hear you.
Still no. Is it just me? I still can't hear you, Andrew. Go ahead.
In the meantime, what do you think of Andrew's question about whether money is real or not?
I'm gonna hand that one to Ellen, even though I'm the one who laid that honey trap.
Well, it depends how far back you want to go. Like, I sort of find it fascinating where our whole banking system came from. It came from ancient Sumeria. Was that 3000 BC, I think, and so originally the banking system was just a credit system. Like you would rate the value of different commodities against each other, and the banker was the temple, so it was the government in a way. And they charged quite high interest rates, but they still they kept the same interest rate, I think, for 1,000 years or 2,000 years. I mean, it was a very stable system. But anyway, so originally I would say that money is just a value system, a way of measuring things against each other. It's obviously not backed by anything today other than the full faith and credit of the United States. And even though it's our credit, we don't seem to be getting the benefit of it. I mean, it's been usurped by a private cartel, but I'll let Naveen go ahead.
We don't have to. I appreciate Megan stepping in and entertaining. Thank you, Ellen, for entertaining my crazy question. We don't have to go into that anymore. But I do want to just make sure that I clarify what I think I'm hearing from you. And I want to throw something out there and see if you think it's a fair depiction of what you're saying. That our current model of banking is basically set up to serve the financial interest of corporate banks rather than local communities. And that public banking is a way of restructuring our banking system to invest in the well-being of local communities rather than just lining the pockets of people who own banks. Is that more or less what you're getting at, or is that an unfair representation?
I think that's right. Yeah.
Go ahead.
I think I got it. Okay.
Just I think that it's not meant to be that way, right? Like everyone I've talked to in affordable housing has said, yes, this is a crazy system, but they're also invested in it because that's how they earn their bread, right? I don't think that there's a consensus that it's working. There's a consensus that it could be better, and that's where where things like incremental measures have come up, like reforming the Community Reinvestment Act. The Community Reinvestment Act preceded tax reform in the 80s. I think it was 1978 that it passed. The target of this was forcing a bank to basically do lending, offer retail like services, and invest in local communities. It's measured against those three metrics by either the Office of the Comptroller of the Currency or I don't remember that, another federal office. It's very opaque though. Basically, like you get one of three ratings, like extraordinary, satisfactory, unsatisfactory, and there's not really even a point system, and it's become gameable. It does incent banks to invest in affordable housing, but it also incents banks to buy community banks and then collect deposits from those banks and then buy something complete on the other side of the globe because they're now taking deposits in a local community. And you can end up seeing it's been an issue for community banks to even get good ratings because they're only in a local community and they're not necessarily doing as much volume as maybe a larger bank could. So these systems just aren't quite adept at the nature of the problems that we're trying to solve. It's not a point of malice. I do think it's an era of Reaganomics. It's a hallmark of it that is kind of beyond the point of reform. But I don't think that I will say that it's all well intentioned. Not all of it, but a lot of it is. And it's still, because it's predicated on a fundamentally capitalist exploitative system, that's not exactly a well-intentioned system, but that's probably for another conversation.
Yeah, I think we have to credit the banks for they've set up the system, but now we're just refining it and making it serve the people better than the system we've got.
Yeah. We've got some great questions coming in from the audience, and I want to incorporate one here because I think it helps us dig in just to a very concrete example. What's the difference, basically, just in a very practical way, for account holders between public and private banking? And then also, I'm curious if, in addition to that, if one of you would be interested in introducing the notion of, never mind, I forgot what I was going to say. So focus on that one, public and private banking, and what the difference is for account holders. Is there one?
I'm happy to jump in on that. There doesn't have to be one. It kind of depends, is the short answer. The way that we're talking about AB 857 is that you or I, as an individual account holder, would not actually go into a local bank that is a public bank. You could go to a credit union, you could go to a community bank, and that they could be able to offer you a home loan or a student loan that they couldn't offer you before because they bank with the public bank. In the case of the Bank of North Dakota, you actually can go to the Bank of North Dakota and get a student loan or a home loan or a farm, like an agricultural business loan. And I see, as a side note, somebody just asked, how do credit unions fit into this? Credit unions serve specifically their members. They're a member-driven organization. They're not necessarily targeting a wider public good, but they can do a lot of public good, but it's member-driven. This is about a public audience. There is another model where you can have something like under AB 1177, where in an eventual world, what AB 1177 is, the Bank Cal Act is setting up for, is a state bank, right? Where you actually have local branches, you're going in, you're putting your money on deposit. And what that eventually makes possible is actually, maybe a different user experience. There's definitely skepticism, rightfully, that the government might not be able to do something like this very well from an interface perspective, online banking, et cetera. But we also know that it's not necessarily working that well as it is. Your money that you deposit could go to new financial products. Think about you could, as a citizen or a resident rather of a municipality with a municipal public bank, you could have a specific amount of money set up into what's basically known as a baby bond. That bond could be something like $1,000 that comes out of a profit of the existing bank, and is basically set up and then invested in public type causes. You could invest it in affordable housing, and for instance, you could invest it in green infrastructure, in small business loans. To Ellen's point, a lot of these loan products are no riskier or often less risky than like affordable housing lending is a great example. When I worked at a bank, we had basically 0 defaults over 25 years. Compare that to commercial real estate, which is much more risky. So you can invest that money that you might have parked at Bank of America, which is going exactly where you think it's going, which is not exactly anywhere that you want it to. It's not targeted towards you or your community. You can be sure of that if you're banking with a large bank. So that's one of the main differences that I think starts to come to the fore in the context of this infrastructure play. I don't think that that's an immediate term horizon for any of the measures that we're working on at the local, state, or federal level. It is much more incremental than that.
Anything you'd like to add to that, Ellen?
Well, it just did make me think of a question for Naveen. So under AB 857, do you have to have your business plan prepared? So for capitalization, can you issue bonds, or is that allowed? You
It
can?
depends on your charter. Like,
I thought it used
but
to
yeah.
be that you couldn't borrow to capitalize your bank. I mean, I know Oakland is having a problem figuring out how to capitalize theirs. They're trying to come up with.
I think
Anyway.
in the case of LA, a bond issuance is definitely on the table, but it's 2/3 majority to get to bond issuance based on the charter. So it's not preferred because it's a voter ballot measure that you'd be required versus like going through city council, which might be a little lighter lift. The other thing that I think is important in that it's not exactly like a very popular public topic. It's kind of esoteric, this idea of public banking. And it's basically like the nerd in me that came to it in the first place. And I went to graduate school thinking like, well, I want to learn about affordable housing finance and, you know, how to make it better and like, why does it cost so much, et cetera. But really you have to go a level deeper and think about how this money operates. But making that into a public cause is difficult. Like railing against Wall Street is one thing, but kind of rallying for a public option that won't necessarily even be retail first. That's why 1177 succeeded in California, because it has a retail component that people will see and feel. It's kind of like behind the curtain type stuff that I think is equally important to understand, but a lot of it starts with just kind of trying to wrap your head around it through conversations like this.
So I'm so glad you mentioned the inner nerd in you, because I want to tap into that for a little bit and sort of build on this sort of esoteric challenge, right? And one of the questions that I want to ask and want us to explore is sort of, what is the purpose of banks? And I know that's a silly kind of question maybe, but here's the reason.
It's a great question. Oh.
Gotta be kidding me.
Oh, no, I think you're back.
All right, and we're back.
Great.
Yep, craziness. So I just want you to bear with me for a second, because here's my thinking on this crazy question of what is the purpose of banking. So I want to imagine a new kind of civilization that's designed for the long-term well-being of people on the planet. I'll call it an ecological civilization. And I think in order to do that, I need to reevaluate underlying assumptions that are sort of embedded within the structures of our social and economic organization, and then assess whether or not these systems are adequately designed to fulfill their intended purpose. So then what I want you to do with me is a little imagination game. I want you to imagine and envision our society, envision California 25, 50, even 100 years from now. And imagine that this future California is both sustainable and equitable. What does banking and finance look like in that future? Is there a place for private banking, or is it all public? How would you finance work on a local level in this well-being economy? What's the relationship between local, regional, and global systems of banking? How would public banking be connected to clean energy, affordable housing, and so on? So I really want you just to dream with me and do so thinking about the purpose of banking. Who wants to go? Yeah, go ahead, Ellen. Dive in.
But I'm not dreaming. I mean, I've thought through what's the purpose of banking. I mean, we think of the line is that banks are creating our money, but actually you yourself are you're turning your credit into money. So if you went to the grocery store and you tried to pay with an IOU, your grocer is not going to take it. But if you go to the bank and the banker will take it. I mean, you're signing a mortgage, of course, so it's backed by collateral, but he knows where to find you. He's going to charge you some interest, et cetera. And so he's essentially backing up your credit. And so that's the purpose of a bank, is to, so now we have things like Bitcoin, and that's what supposedly they take the banker out of it, the middleman out of it. And it's a secure way of assuring your credit, but there are issues with that too. But I think that's what you're looking for is a system where people can trust your credit. So it's the trust of the full faith and credit of the people or of the bank or whatever. I mean, I would see that there is always going to be a role for some sort of way of guaranteeing your credit or validify or, making your credit be good. Naveen?
I agree. To answer a part of your question, Andrew, I think that there doesn't necessarily have to be, we don't have to eliminate private banks. I think that there are a lot of things that private banks are good at. I think that the public banking infrastructure is about kind of filling the gaps that private banks aren't necessarily aligned in their profit seeking to fill. Another way that private banks would likely benefit from kind of being regulated is in terms of bonuses. Some of you may have seen Jamie Dimon got a $50 million stock option to stay on another couple of years at JP Morgan. This was in the news like a week or two ago. And like $50 million to Jamie Dimon was worth a couple billion. It doesn't make a big difference. The point being there that there has never been, as far as I know, a meaningful attempt to regulate bonuses for bankers. And so that's kind of the catch-all in terms of where money can go, that and dividends to shareholders. But if you're able to regulate and kind of tighten what is allowed in the banking space, in conjunction with creating incentives for public investment, you might actually do a whole lot better. In the same way that if we had a more progressive income tax and a more progressive capital gains tax and a more progressive corporate tax, then some of these market-driven mechanisms to provide for the public good would actually be more effective. But you can't do one without the other. And right now, I think in that spectrum, we're leaning more towards that side of well, we want carrots, but we don't really want sticks. To go back to the other part of your question of what are banks for, I think it's a really excellent question because it always like every time we get like really to the kernel of something in finance, my head always starts to spin a little bit, and it's important to recognize what Ellen said, that banks are not the money creators in our society. Even they're the vehicle that enables more to happen with our money, with other people's money, right? And I think what we really want to see happen is that all this big pool of other people's money be targeted towards people and not necessarily corporate interest, not necessarily profit. We see what that looks like. It doesn't take a whole lot to think about what it might look like in California, where the LA Times 4 times a week, the front page is a wildfire for the past couple of months, right? Like, what does fire mitigation look like? What does it look like for us to be able to issue a bond that allows us to pay our incarcerated laborers who make up a third of our firefighting force in the state up to more than $1 an hour, or actually I think sometimes $1 a day, a quarter an hour. These are things that need money too, and these are causes that no bank really wants to finance, and bond measures as a result are kind of impractical. Like, how do we finance a more sustainable future? And that's exactly where public banking could, and ideally will fit into.
Mm-hmm.
Beautiful. That's inspiring. Go ahead, Ellen.
And public credit, I mean, there are many things like, well, let's say the Chinese creating high-speed rail. Obviously, the passengers are going to pay fees, and that pays back the loan. But what about fixing the roads? Nobody's going to pay fees for fixing the road. Who pays for all those things that we know we need? We all agree we need these things, but nobody's going to pay it back. I mean, a loan is not necessarily the best way to fund it. It would be better to just agree we need that thing, and let's just print the money and do it. And we could do that. And that's certainly what the American colonists did. But of course, they ran into the problem of they printed too much money, or, you know, it was a lot easier to print than to pull it back in taxes. So anyway, it seems to me that beyond just banking where it's making loans, that there's a potential 100 years in the future or whatever to just create what we, you know, once we agree, what we really need, I guess, is more of a collective mindset where we actually agree on what we need, you know, and invariably once it gets into politics, one side says we need it and the other side says we don't, or one side said it's going to be inflationary and the other side says we need it, whatever. But it seems to me there's that other aspect of banking and money, and which is credit. I mean, just the ability to create something and issue the money for it, and it doesn't necessarily have to get paid back. I mean, it will get paid back in the future in the form of making life easier for everyone, like maybe saving the amount of time you spend on the road or whatever. So yeah, fuels and things like that. Yeah.
This is wonderful. We're getting close to the end of our first portion of this. And so but I do want to pick up on something that you said, Naveen, and that you mentioned the challenge of taking a somewhat esoteric issue like public banking, finance, and then turning it into a public movement. So can we talk about that? Like, what are some of the strategies and some of the actions that you would recommend for those of us who want to make a difference, but we don't know where to start? And maybe not just sort of the esoteric problem, but just, can you speak to some of the other challenges in trying to establish public banks in California, and what advice you have for the rest of us?
Sure, that's a great question. I think for me, the nerd in me, the econ student, was always like happy to speak in, you know, too many syllables. And so the first thing I'll say in terms of making something less esoteric is like use fewer syllables, right? Like if you're using a word like securitization, that's a lot of syllables. Like, what do you mean, right? What is the bullet point? And for me, things like, all right, the Occupy movement was about was in part about divestment, and they were hand in glove type movements. All right, divestment. What has to follow from divestment is investment. So if we're divesting, what are we investing in? And then I think to your point about also like what are banks designed to do? What is a public bank really good at? I think it's good at local needs. It's good at leverage, and it's good at low cost credit. So like figuring out what these key needs are, and being able to speak to them succinctly has been, you know, and it will continue to be a big process of growth. One thing I'll also point out in terms of the esoteric is that anybody who works at a bank doesn't really know how the whole bank works, a big bank especially. A lot of folks have written on banks, and kind of the sweet spot in terms of what a bank's asset size should be is maybe around $1 billion. Anything bigger and you start to get into really complex. And the bank I worked for is about 80 times as big in terms of its asset size. And you end up with, nobody really knows how different branches of the bank work. You end up with a lot of redundancy inside the bank. So don't be afraid in terms of approaching that complexity, because bankers have their own language that has evolved, whether intentionally, maliciously or not, it's kind of debatable, but like even in affordable housing where I work, like there's tons of acronyms and there's all these things, but there's always the presumption that the people who work in there know better, but I can guarantee you that that's seldom the case. You have to be able to go back to first principles to kind of get around that. There was a second part of your question in terms of what other strategies.
Challenges. And
challenges.
Yeah, just how do you overcome, what strategies and actions do you recommend that we take?
It's kind of related. When we were working on the state bill that Ellen also mentioned last year, we spoke with the treasurer, Fiona Ma, our state, as well as the controller. And now I interface not directly, but indirectly with the treasurer, especially around affordable housing tax credits and bonds. And it's kind of the same in that there's a lot of misinformation. These folks are running enormously complex, large organizations without necessarily getting into the weeds. They're relying on the folks who work for them, especially on the political front. You have political kind of ambitions. I think both the treasurer and the controller anticipate running for office in 2026. So it's, again, not being afraid of approaching that complexity, but all the more important to keep in mind the narrative and kind of think about people's motives in terms of what might make them look good. And that is a challenge also in that this is an intergenerational kind of product that we're looking for. Not even a product, it's an intergenerational movement. Some of its products can be intergenerational as well, like a baby bond or pension funds that invest in affordable housing. But to get there takes a long time. I fully expect, and not to be a downer, that this is something that I will spend a long time working on, right? And I think it's about changing hearts and minds much, much more than it is about showing someone a spreadsheet or diving into the details, because you can argue the details, and at the end of the day, the details don't matter. That's not how legislation gets made. So I think understanding that it doesn't, like, you have to be comfortable and you have to be able to dive in. If you're, or know your weak spots and know what your first principles are, and use that to guide you, rather than worrying about like, the language or a spreadsheet or something like that. Everyone in this room has the same, or not has the same, but has those first principles of what are we trying to achieve, and it might look different for different folks, but I think using that as your guide point will get you a lot farther.
Ellen, I wonder if you can add to that and maybe connect some of the insights that we might what are some of the lessons that we might learn from the Bank of North Dakota that would be helpful as we try to take specific actions in the California context. But you don't have to connect it if you want to. You may.
I saw that Susan Harmon and Laura Wells are in the audience. I don't know who else is there, but they're both great activists. I would ask them. They know how to mobilize. Laura Wells ran for governor. I ran for state treasurer. I mean, as a Green, there was no hope of winning. But you do get your ideas out there, and I actually think we need young people to run for office over and over. I mean, my generation, we're out. It's time for you all to take over. And so, but for me personally, I like to write, and I like to figure, like Naveen says, to figure out what's going on. I mean, I like to get into the weeds and try to turn it into something that people can understand, turn those big words into ordinary housewife language type stuff. Yeah. So to me, that's interesting and fun. And
yeah. Ellen, you're right to point to the time. We are coming up to the place where we'll transition to our breakout rooms. But I do want to ask one final question of the both of you. It's a question that I think is always helpful to end on, and that is about hope, right? We've talked a lot about some of the big challenges. Naveen talked about how he just expects it's going to take the rest of his life to work on this. The stakes are high. The task is fraught with complexity. So in the midst of all of that, what gives you hope?
Go ahead, Naveen.
You give me the hard one. I think one thing that Ellen just said is how politically engaged I feel like people have been, especially since 2016, and also the events of the past year and last summer. There's a lot more willingness to kind of look behind the curtain of local governance and ask questions and call city council and show up to organizing Zooms. That kind of stuff, I think it never used to appeal to me either for a while. But I think that seeing the amount of engagement, especially in the public banking movement, some folks who are also in this group, Ellen pointed to Susan as well, Margie and Brett, Rick, these are folks who've been doing this for longer than I have. But acknowledging the fact that there is a growing consensus around what isn't working, and there is more willingness from within this room, and also from a intergenerational and from a kind of coalition-wide perspective to tie things, to tie movements together, like Black Lives Matter with Occupy Wall Street. Like, people get that it is banks that are funding systemic racism, and that are perpetuating redline communities, I think that connection and that coalition building is really valuable and will carry this movement a long way.
Brilliant. Ellen?
Well, I think more, I mean, I'm just home and, home on my computer all the time, but what gives me hope, or what I think is exciting, is the internet. The fact that we have more access to knowledge right now than we've ever had in history. I mean, the ability to, when I was young, I spent a lot of time in the library, and you'd carry these big books home and Xerox stuff out of them, and then the book you needed wasn't there, or whatever. I mean, you just couldn't. I started writing about the Federal Reserve, or I tried 50 years ago. Well, not quite, 40 years ago. And I couldn't do it because, you'd want some figures or something and they just weren't there. But now you can find all that information. You can know people around the world, or feel like you know them, if so you can know that the public, nowhere is the public your enemy. Everywhere the public are people with families and feelings and all that sort of thing. Anyway, to me, there's just so much potential in well, or you could say, wouldn't even want to get into digital currencies and all that stuff, but there's just so much, it's so much potential of technology that we never had before, or even when I was young. And so, now it just seems like there's so much to be done or so much that can be done.
Fantastic. And digital currency, maybe that should be our next topic. That sounds like fun. Well, this has been a wonderful conversation. Thank you both to Ellen and Naveen, and to all of our audience members who are putting in great ideas into the chat. I'm inspired, and I'm excited that our momentum can keep going as we break out into our small group discussions.